Karp is talking about U.S.-centric. He's talking about AI and arguing that this isn't some kind of a bubble or excessive speculation. It's hard for investors when they see Palantir continue to go up to say, well, let me eat my vegetables and do some dividend payers and some stuff outside the U.S. What do you say?
So, John, I'm not going to be the skunk at the picnic. That role I refuse to take. But I will say, look, I don't know Palantir that well. I'm not going to tell you any insight that people don't already know. However, what I would say is that these exceptional few stocks that people think are so unique are not unique. There are many stocks within the United States and outside the United States that are growing as fast, if not faster, than, say, the Mag 7 or plus, whatever that group might be. So I don't dispute that some of these companies are putting up very good numbers. That's not where people like me have a disagreement with what's going on. It's more the uniqueness. These are not unique companies. There are many companies that are doing this right now.
Richard, do you think we still have yet to see a bigger, deeper shakeout in terms of the AI trade here? And I asked that knowing that I asked Alex Karp the same question, whether we're in a bubble. And of course, he put his Palantir earnings numbers in front of me to counter that. But I guess maybe perhaps in terms of that conversation, ex-Palantir, where Karp was concerned, he basically said those that are already, creating value and making money and doing well in AI are going to continue to be valuable, and everything else we are going to still see a shakeout.
So Morgan, I would say that many of your viewers have a great difficulty differentiating between an economic story and an investment story. The economic story would be, will AI change the economy? And of course, the answer to that is yes. But technology always changes the economy. There's nothing new with that. The internet changed the economy, the automobile, my personal favorite, the light bulb, major productivity enhancing technology at the time. We wouldn't even consider it technology anymore, but it turned the economy into a 24-hour economy. Huge productivity enhancing invention at the time. The investment story, though, is very different. And we think the AI investment story will ultimately be quite disappointing. And the reason why is because when you invest, you want to try to be the one banker in a town with 1,000 borrowers. That, by definition, the supply and demand of capital, by definition, will set your long-term returns. It's hard to argue, given everything we've just talked about, that the AI themes are starved for capital. However, that overcapitalization of AI themes will allow it to pervade the economy faster. So there's kind of this weird dichotomy here where overcapitalizing a sector allows it to pervade the economy more rapidly, but it also means investment returns longer term will be worse than people think.
Yeah, after a torrid run, I mean, gold is taking a little bit of a breather here. We're seeing a downdraft in cryptocurrencies as well. You've done a lot of work on both of these asset classes. What have you found?
Yeah, I think a lot of people talk about crypto as being digital gold, and I think that's completely wrong. Cryptocurrencies are an asset class that's fueled by financial conditions. In other words, easy financial conditions, you'll find crypto goes up. Tougher financial conditions, you'll find crypto goes down. In other words, it's a speculative asset class. Nothing necessarily wrong with that, but it is a speculative asset class. Gold, on the other hand, has a very high correlation with uncertainty. So if you want to hedge uncertainty, gold would be your portfolio. It would be in your portfolio. But if you think that there's just going to be more and more liquidity, it's going to be speculative forever, then you'd want to have cryptocurrencies. But I think the notion that crypto is digital gold is completely wrong. I don't think that's right at all.